Do you ever wonder, can I just write myself a check from my LLC, or do I have to run payroll? And more importantly, how much tax is that going to cost me? We've all been there. Late-night Google searches, YouTube information overload, and overthinking every dollar you pull out. In today's video, I'm going to tell you a story from my own early days as an LLC owner. I almost messed everything up because I didn't know the rules. But here's the good news. By the end of this video, you'll know exactly how to pay yourself the right way, avoid tax surprises, and protect your business for the future. So let's talk about why this even matters. Let's say your LLC makes $5,000 a month in profit. That's amazing. But if you just start Venmoing yourself money or transferring funds without any plan, you're exposing yourself to a bunch of problems. I used to do this too. Just take money when I needed it. No system, no payroll, no bookkeeping. It felt harmless until tax season came around. That's when I found out that those withdrawals don't count as business expenses and they don't reduce your taxable income. So guess what? I paid tax on all of it. That one mistake cost me thousands. I don't want that to happen to you. When you own a US LLC, there are really only two legit ways to pay yourself. If you're a single-member LLC, which most freelancers and solo entrepreneurs are, you'll usually pay yourself through something called an owner's draw. That just means you transfer money from your business account to your personal account. That's it. No payroll, no taxes withheld. But here's the catch. You still owe taxes on your profit, whether you withdraw it or not. And that means you need to plan for those taxes. Otherwise, you're going to be in trouble come April. The second method is when your LLC elects to be taxed as an S corporation. In that case, the IRS requires that you pay yourself a reasonable salary. That means running payroll, withholding taxes, and getting a W-2 at the end of the year. You can still take additional money as distributions, and those are often tax-free. That's where the tax savings come in. We'll break both of these down in detail, but first, let me show you how the draw method works. If you're sticking with the default LLC setup, here's exactly how to pay yourself using draws. First, open a separate business checking account. Never mix personal and business money. The IRS hates that, and it can even pierce your liability protection. Next, figure out how much you want to pay yourself monthly. I usually tell people to start by calculating their personal living expenses. Once you've got that number, make a monthly transfer from your business account to your personal account. Label it clearly in your bookkeeping, something like Owner's Draw July. And here's the part most people forget. Set aside money for taxes. I personally save about 25 to 30% of my profit every month for income and self-employment tax. You'll use that money to pay your quarterly estimated taxes, which you submit using Form 1040 ES. Don't just wing this. Set up a spreadsheet, or better yet, use bookkeeping software like QuickBooks to track everything. So when should you switch to S Corp? Now let's talk about the S Corp setup. This is where things get interesting. When your LLC starts making consistent profit, usually above $60,000 to $80,000 a year, it might be time to consider electing S Corp status. Why? Because S Corp allow you to split your income between salary and distributions. The salary portion gets taxed like any normal paycheck. You withhold Social Security, Medicare, and federal income tax. But the distribution portion? That's not subject to self-employment tax. That's where the savings come in. Let's say your business made $120,000. If you paid yourself a $60,000 salary and took the other $60,000 as distributions, you could save thousands in self-employment taxes. But here's the catch. You've got to do it right. That means setting up payroll, filing quarterly tax forms, and keeping your bookkeeping airtight. I use a payroll service to make it easier. Don't jump into this too early, because if the IRS sees you taking low salaries just to avoid taxes, they can come after you. The key phrase here is reasonable compensation. But if you run a multi-member LLC, maybe you started a business with a partner or spouse, and your income gets split based on ownership percentage. You can still take distributions, but you might also want to use something called guaranteed payments. That's basically a way to pay a member for active work in the business, even if there's no profit. It's like a salary, but doesn't require payroll. The important thing here is to make sure your operating agreement spells out how income is shared, how distributions are made, and how decisions are handled. That'll save you from a lot of drama later. Now, how much should you actually pay yourself? There's no perfect number, but a good starting point is your personal budget. Figure out your basic living expenses. Then look at your business cash flow. Make sure you leave enough for taxes, expenses, and emergencies. If you're using the salary route with an S-Corp, research what someone in your role typically earns. You can use sites like Glassdoor or the Bureau of Labor Statistics. That number is your reasonable salary. From there, anything extra can be paid as a distribution or reinvested into your business. Look, I'll be honest. When I first started my business, I didn't do any of this. I had one bank account. I was pulling money whenever I felt like it, and I wasn't setting aside anything for taxes. Then April came, and the IRS handed me a $4,200 tax bill I wasn't ready for. I had to borrow money to pay it. That's when I got serious. I separated my accounts. I started paying myself a fixed draw each month. When my business hit 6 figures, I switched to S-Corp and got on payroll. That year, I saved around $3,000 in taxes just from doing things right. So if you're an LLC owner wondering how to pay yourself, here's what you should do. Start with a drawing method. Make it clean, predictable, and trackable. As your income grows, talk to an accountant about switching to S-Corp. Don't wait until it's tax time. The earlier you plan, the more you'll save. And if you're still figuring this out and don't want to mess it up, I recommend using Busy. They'll help you form your LLC, get your EIN, and even consult you on tax strategy. It's 100% legit, and you can get started for $0 plus your state fee. The link's in the description. If this video helped you, drop a like, subscribe, and hit the bell so you don't miss future episodes. I make videos every week to help entrepreneurs and small business owners grow smarter, save money, and avoid the mistakes I've already made. Comment below if you have questions about LLCs or taxes. I answer every single one. Thanks, and I'll see you in the next one.